disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Okay, if you have any questions, just pop them in the question box. I'll keep the question box open. And if you have any questions, I should be able to answer them. If they're not, if I can't, you can also put your name and phone number, or your not Skype username, your Teams username, since it's Teams now, in the chat box, and Rory will call you from Right Line. That's his number right there, and I'll post this again at the end of the presentation. Okay. This, by the way, this is a graphic of the alert service. It used to be called the Compass Alert Service. I still call it the Compass Alert Service, but it's using this. The Compass system has been renamed the SPY Super System, been enhanced, and I think the SPY Super System is a better name for what we actually do, is basically identify setups that are in the SPY, the Qs, the IWM, and every single stock that there is by using the software. But this is what the text looks like. It comes to you on an SMS alert to your phone. If you sign up for the text service, and we send out high probability trade setups on this alert service. We have 2 of them right now that are out there. We have one BBIO, which is a call debit spread for January. I don't usually do them out into the past a week, but I did this one because it only has monthlies. And we're also short O'Reilly. We just put O'Reilly on as a short. Those both are on the alert service. Okay, so what we're going to talk about first of all, and I always talk about this first, what drives the market, what moves the market, all right? The market consists of many small retail traders plus one large institutional trader. That's really not true, all right? And these should be much smaller. So I put another little slide together to show what drives the market. Here's your institutions. There's not one big institutional trader. There's a lot of institutional traders. And then there's retail traders. We're the little marbles right down here. It's important to understand that retail traders can't move the market. We can't move the market up. We can't move the market down. We can't create trends. We can't break trends. Only institutions can do that. So what we look for with the SPY Super System is to identify when the institutions are in a trade with enough force to basically follow them into the trade. Is there enough institutional buying or selling going on right now in a stock or in an ETF to justify getting into the trade? We have to have enough institutional involvement in it to justify that. So we don't really want to be in any trades with just retail traders. We only want to be in when the institutions are in the trade. And that's what the SPY Super System identifies. Now, let's understand what institutions are. Everybody knows institutions are made up of investment banks, Goldman Sachs, Morgan Stanley, JP Morgan, all of the big institutions. So that's part of the investment banks. That's part of the institutions, right? But there's other entities that make up institutions. Hedge funds are another one. There's hundreds of hedge funds, and they are also part of the institutional group. And so are pension funds, big pension funds for firemen, police, state workers. There's, again, probably thousands of funds that are pension funds. And lastly, the fourth group is mutual funds. T. Rowe Price, Vanguard. These are the big mutual funds that are part of the institutions. So that whole group makes up institutions. And what we're looking for to see if the stock is tradable is we want to see enough institutional involvement in a particular stock to justify taking the trade, because institutions are trading all the time, right? But what we're looking for is an alignment of institutions that are pushing a stock one way or the other, up or down, bullish or bearish. We're looking for enough of the institutional involvement to actually determine that we can follow it. Because again, obviously they're trading all the time, but what we're looking for them is trading one stock in one direction, and that's what this SPY Super System will tell us. That's what we find. And but this is the key to being. This is the key to being a successful trader. Being on the trades at the correct time when the institutions are in them, and avoiding the ones that they aren't in. All right, so that's what drives the market, and that's what we look for. Now, this a little bit seems a little bit off topic, but I want to just talk about this for a second. This is a blackjack table, obviously. If you've ever played, ace and jack of spades, nice blackjack, couple $100 chips, green felt here. So we know what a blackjack table looks like, most of us do. Why am I bringing this up? Well, the reason I'm bringing this up is if you've ever talked to anybody about becoming a trader or becoming an option trader, becoming a day trader, what you're going to hear a lot of times is that it's gambling. It's fixed against you. You can't win trading stocks, trading options. You can't do it. So is trading stocks and options gambling? Well, the reason I'm using this blackjack analogy is because when I was much younger, I made my living playing blackjack. I was what's called a card counter. You're not really actually counting cards. You're tracking the cards as they're removed from the deck. So that as the little cards are removed from the deck, the deuces through 7, the edge moves to the player. The more of those little cards are removed, in other words, if the remaining deck has fewer little cards than it normally would, then the player has an advantage. And if the big cards are removed from the deck, so there's more little cards than there normally would be, the house has an advantage. So that's how I track the cards. I kept track of the basically what the composition of the remaining deck was to know if I had a edge or not, or a bigger edge. And obviously, when I had a big edge, I bet more money and on more hands. And when the house had the edge, I bet the minimum on one hand. All right. So why am I bringing this up? Well, I think trading stocks and options is very similar to blackjack or gambling altogether, in that without knowing what the institutions are doing, the trader has no edge. So in essence, they're gambling, right? So if you don't have an edge, you don't have a method that's proven, a statistically proven method, then you are gambling when you're trading. And that's why most people who trade lose money. I mean, that's just a fact. They do. And one thing to know about the trading stocks and options or playing blackjack in this particular case, both of them to be successful, both of them require discipline and emotional control. This is really critical here. You can have the best system in the world for playing blackjack, or you can have the best system in the world for trading stocks and options. But if you are not able to maintain discipline and emotional control, that's going to be the downfall of your trading. And so this is really important. So we'll identify the setups. We identify high probability trade setups. We have about an 85 to 90% win rate, but you have to be able to maintain discipline and emotional control in order to become successful at this. That's very important. So I consider the SPY super system to be my card counting system. In other words, it's giving me an edge over other traders, allowing us the ability to become consistently profitable by using that. And the SPY super system, this software I'll show you, in conjunction with identifying the best high probability trades, can lead to consistent profits. So when we talk about the profits that you see that we made this year and last year and the year before, it's because we have the SPY super system. We're able to identify what institutions are doing. This is a very critical element. Okay. Now, in the room and in the alert service too, we've got rules to trade by. First thing is we trade the best and skip the rest. We don't take an awful lot of trades. We're just taking the very best trade setups that we can find based on what the institution is doing. Skipping the rest is probably even more important than finding the best trades, because by identifying when institutions are in the trades and when they're not, you may have a trade that looks like a really good setup, but it's not being pushed by institutions. We're going to skip those. And this is a big deal because a lot of people think that, finding trades and how much money I can make in a trade is most important. The more losing trades that you skip is probably more important than the winning trades, and for two reasons. Obviously, it's saving you money. If you have a losing trade that would have been a losing trade and you're able to avoid it, that's basically making money. And secondly, the more losing trades you have, in other words, the lower your win rate is, that has a very detrimental effect or impact on your trading mentality. It's very difficult to be consistently profitable if you don't have a good belief or confidence in your trading methodology. So the more losers you take, the more that's going to suffer. So you become a less effective trader when you're taking losing trades. So we try to avoid those as much as we can. Do we have losing trades? Of course we have losing trades. Everybody has losing trades. but we have very few. Again, 85 to 90% win rate says the number of trades that we lose is pretty small. Okay, and in the room, and our objective is not to make trades. Our objective is to make money. And this doesn't sound important, but this is really important because some of the major drawbacks for most retail traders is that they trade too much. They feel as though they always have to be a trade. It's over trading. They trade too much. They're in more trades than they should be. They start to justify taking trades because they're bored or they want to be in a trade. So again, our objective is not to make trades. Our objective is to make money, and everybody's objective trading should be to make money. That's the whole point. I mean, if you're trading stocks and options, what are you doing it for if it's not to make money? It shouldn't be to boost your ego. It shouldn't be to prove that you're better than somebody else. It should be to make money. That's why we're doing this. Okay, maintain discipline. I mentioned this earlier. You have to maintain discipline. Learn and follow the process. What we're talking about here is there is a specific methodology for becoming a consistently profitable trader. Our method, the SPY Super System method, is fairly all-inclusive. It's not just looking for institutions. There are other things. There's more technical analysis that goes into it. What's the market doing overall? All those kind of things. That's the process you learn. And you learn and follow the process, and then you remain patient, which means stick to your discipline. Okay, make your discipline, keep your emotions under control, remain patient, wait for the stock prices to come to your level. Don't be chasing. This is all meant to keep people from taking trades that they shouldn't take, that are mediocre trades because they're anxious to get a trade on. Okay, this is really important. So as profitable traders, we need an edge. We're trading against other retail traders. We have to have an edge over them. That's who we're trading against. We're not going to take money from institutions, by the way. We're taking our profits from other retail traders. We're battling with them, and we have better knowledge than they do. We have better software than they do. We have better methodologies than they do, because most of them have no idea what they're doing. Not to be crude, but most people come into trading, retail traders. They learn a couple of things and then they think that's all they have to do. It's easy. It's not. All right, profitable traders need an edge. Our edge is we have the SPY Super System software. This is the big, huge edge here, because this identifies very well whether institutions are in the trade or they're not in the trade. This is what's going to drive our profits and tell us when to take a trade and when not to take a trade. Anything we take, any trade we take, for the most part, is going to have this SPY Super System is indicating that the institutions are in that trade for whatever time frame we're using. We trade relative strength and relative weakness. Now, this is something that a lot of retail traders overlook. They think relative strength is RSI. You've heard, I'm sure you've heard RSI, relative strength indicator, and relative strength index, whatever you want to call it, that you put on the charts. When the stock's got relative strength, this is a good time to trade it. And when it doesn't, it's not. But relative strength isn't really comparing a stock against a stock, because that's what relative strength index is. Relative strength versus the SPY is what we're looking at. How is the stock moving in relationship to the SPY? All right, if the SPY is moving sideways and down, and your stock is moving up, stacking green candles, that stock's got relative strength, and vice versa on the downside, relative weakness. This is a huge edge, because in any trades that you're going into that have relative strength or relative weakness to the market, if the market turns on you, which it many times will, that stock's gonna outperform the market, which means you're gonna be in a lot better shape to get out of it. If it's going against you, you're gonna have a much smaller loss. And if the market just moves sideways and you've got a stock with relative strength, it's likely to keep moving up, right? So this trading relative strength and relative weakness is a second edge. And it's surprising to me that so few retail traders actually pay any attention to this. To me, it's because it makes such a big difference. We trade with the market trend if there is a market trend. Market's bullish, we try to trade long. Market's bearish, we try to trade short. Some days, and a lot of days, the market's choppy. Or you may have a bullish trend in the morning and a bearish trend in the afternoon. You have to be able to identify that and line up your trades with that direction, if there is a direction. And buying near support and selling near resistance is critical. This is going to get you into a trade very close to your support level. If you're taking a long and it breaks out through a resistance level and you're long, if you're in right near that resistance level, right near where it broke out, your downside risk is going to be very minimal because you're trading right near the support levels. If it breaks down and doesn't work, you can take a much smaller loss. If you were chasing that stock as it moved up, then your stop is going to be way down at the support level, which means that you can take a fairly big loss if you don't get in near support or resistance level. So very important. Buy near support, sell near resistance. You're taking a short and the stock moves up and gets to a resistance level above it and then turns around and heads back down again. That's where you want to get in, right where the resistance was. Okay, that's the key. Those are the 4 edges that give us a huge edge over other retail traders. And if you just do these 4 things right here, you'll be head and shoulders above about 95% of the retail traders in the world, and there's millions of them. Okay, the compass system, which is now called the SPY super system, what does it do? Well, it identifies the highest probability trade setups while sidestepping setups that look good but will fail more often than they would succeed, right? Skip the rest. It does this by identifying when institutions are driving the move and when they're not. And the software itself analyzes some fairly complex trading data, momentum, money flow. There's a lot of different analysis that goes into it, but it shows the results in easily identifiable visual format, which makes it easy for retail traders to identify trends, identify when institutions are in it, when they're not. It really does simplify the process a lot. And this visual element makes it possible for even new traders to find high probability trade setups, which is a really big help to fairly new traders, because it's very confusing when you're starting to learn how to trade, because there's so many things that are going on, and you hear so many different people talking about trades and talking about RSI or MACD crossovers or Fibonacci's, all these kind of things. This thing here is going to tell you, the SPY super system is going to tell you whether the institutions are in the trade or not, and that should be the #1 concern. Okay, so we gain an edge over other retail traders. How do we do this? Okay, we're only taking trades that are being driven by the institutions. Very important. Main thing. We trade stocks that have relative strength and relative weakness versus the SPY or the Qs, and trade in the direction of the overall market trend. That's really important. That's really what it boils down to. How does this give us an edge? Well, when we take a trade, they're going to be supported by institutional buying and selling. That doesn't mean the institutions are continue to buy and sell all day long. But when we take the trade, they're in there. So we're in there at the same time they are. The stocks will be outperforming the index, the SPY or the Qs, and the stocks that are moving the stocks will be moving in the direction of the overall market, if there is a direction to the market. Okay, that's how we get an edge over other retail traders. Again, having an edge over other retail traders is a big deal, because that's who you're going to battle with every day. Trading is a war. You're at war with the other retail traders out there. Everybody's trying to take each other's money, and what we do is we just have a better methodology than they do, better information than they do, and that gives us the likelihood, the probability of being able to take money from them consistently, which in the room we do. Okay, SPY super system. I'm going to talk about it here. The software itself, it's important to understand that this is the critical element in finding and trading the highest probability trades. All right, this software it's the engine that drives our exceptional results. We'll show you the results. Again, 85 to 90% win rate most of the time. It's being driven by the SPY super system, as well as other things like good technical analysis, etc. Proper selection of the option strike price, proper selection of the expiration date. Those also go into it. But the SPY super system is where it starts. And the ability to identify when institutional players are driving a bullish or bearish move, and when they're absent, that's the key factor in pinpointing high probability trade setups. This is the function of the SPY super system software, and it's the critical component. So you understand what this software does and how important it is. And if you're in my room, I have that up all day long. You can see the SPY super system on the chart all day long. So if you don't have the software, you can actually see it in there, and we talk about it all the time. But for people that want to trade on their own after a while, it's very, very useful to own the software so that you can have the same information that we've got. Okay, just kind of an aside here. I have Brightline has a YouTube channel. I'm on there every day about 11:30. I try to get on right at 11:30. Some days it's maybe 11:35, some days, but because I'm in a trade or something. But I'm on there from 11:30 for an hour each day. And when if you go onto the YouTube, you'll be able to see the room. You hear the questions. You can hear the answers I'm giving to the traders that are asking questions. The traders are asked questions all day long. They'll ask me to take a look at a particular stock, and you would hear all that. Okay. And I wanted to cover real quickly for retail traders, and I assume everybody that's here in the webinar today is a retail trader. I made a video on the most common mistakes retail traders make, so I'm just going to run them through really quickly, see if you can identify anything here perhaps that you've fallen trapped to, because I fell into a trap of all of these when I was learning to trade. Not considering the current market conditions. And I put this number one, because if you've got a choppy day going on, the market's going up, going down, going up, going down, you need to understand that when the market is choppy, you've got to be able to, in the trades that you take, if you do find good setups, you've got to be able to take smaller risks, and you got to be able to take quicker profits. You don't want to be trying to ride a stock all day long when the market's just chopping around. So understanding what the market's doing at the current time is really, really important, because it's going to drive not necessarily the trade you take, the stock you take, but it's going to take your duration of the trade. It's going to take the how much risk you're going to take on the trade, how big a size you're taking. That is all dependent on the current market conditions. Over trading, this is one we've talked about already. Retail traders feel like they want to be in a trade all the time. You know, I'm sitting at my computer, I'm watching the market, I got to be in a trade. They think they have to have a trade on all the time. You don't have to have a trade on all the time. You know, you've probably heard this before. No trade is a trade. No trade is you're keeping the money in your pocket. And a lot of times that's the best thing to do. Trading your P&L instead of technicals. This is kind of one I harp on a lot, because of the fact that this is such a common problem with retail traders, watching their P&L to see whether it's red or green, and trying to just decide to stay in a trade. If it goes against them, they'll get out. If it goes in their favor, they'll stay in, and then as soon as it turns around, they'll get out. They're not looking at the reason that they get into the trade, which should have been your technical setups. Are the institutions still in it? Has it broken down through support? If it hasn't, it's a good setup. But people that are watching their P&L are trading, and your P&L is your money, all right? And if you're watching what your money's doing or what your P&L is doing, you're putting emotions into your trading. You're basing your trade off of what you're seeing on your P&L, and it's a very bad mistake. It's a very bad mistake, because you'll end up getting out of trades that you should have stayed in. And you know, a prime example is if you're in a trade and it's up $300, and it's a nice strong trade, and then the stock comes back down, and now you're flat. And 5 minutes later, you're down $100 on it, and then it pops up, and now you're up $50 on it, and you watch your P&L go from 300 to down to negative, and then comes back up to 50. As soon as it starts to move against you, you're going to bail on it, because you don't want to lose money. You're trading emotionally, and that's trading your P&L. It's a huge mistake, because if that stock was still strong at that point in time, you probably should be adding to the trade. All right. Trading what you think instead of what the price says. I'm going to talk about this in a minute. This is what this is your bias to the market, and it can be created by something you read on X or some other social media site. It can be something you heard from your uncle's brother. It could be it could be from any relative or any of your friends. They're telling you about Netflix. They're telling you about NVIDIA. They're telling you about Microsoft. And so you're trading what you think. You have a market bias that you think the market should be going up or it should be going down. We don't trade what we think. We have to trade what the price is showing us, right? And I got a good quote for this in a minute. Over leverage, too much risk. Obviously, if you've got too much money in a trade, you're not going to trade well, because you're going to be emotionally tied to that trade. You're going to be too nervous to trade it, and you're not going to trade it well at all. Not using the daily charts for swing trades. It's hard to believe that this is true, but a lot of traders, when they see a nice 5-minute chart, they'll take it and they'll take a swing trade on it. They'll go out in time thinking that the stock is going to keep on going without even looking at the daily chart to see if it's set up as a bullish chart or not. You should never be trading long a swing trade if the stock has got a bearish daily chart. It seems obvious, but it's not obviously yet, obviously, because I see a lot of people doing that. All right, so not using daily chart. Lack of patience, obviously. Forcing trades, this is related to lack of patience. I got to be in a trade. Got to get a trade on. I'm a trader, I gotta have a trade on. No, you don't. You don't have to have a trade on. Attempting to pick tops and bottoms. This happens all the time. Thinking a stock is going up as high as it possibly can. It can't possibly go any higher. Yes, it can. Or it's gone down too low. I need to buy it here. It can't possibly go any lower. Yes, it can. They can keep going down. You should not be trying to pick tops and bottoms. Once you get a confirmation of a reversal back, if it's hit the top and it's moving down and you've got a confirmation of a movement to the downside, then you can take it. Same thing on the upside. But don't try to pick tops and bottoms because you can't. You don't know where the top's going to be or where the bottom's going to be. Not waiting for confirmation to enter a trade, that is part of that. Part of number 9, waiting for a stock to hit support and bounce. Make sure that bounce is confirmed. And an interesting thing about the Heiken-Ashi candles is the way Heiken-Ashi candles are constructed, they're made up of 2 candles. When you get a reversal based on a Heiken-Ashi candle, whether it's bullish reversal or bearish reversal, they are inherently confirmations of the reversal because of the way that the candlestick is structured. Okay, and FOMO, fear of missing out. This again, this is emotion. You know, most of people's trades are the problems are always emotionally based. Fear of missing out is greed, and then having a stock go against you and you have P&Ls going down, that's fear. So you're trading greed and fear. And you also can mix in things there like being angry, taking a trade as a revenge trade, or taking a trade because you just had a good run of trade. So I'm invincible. Any trade I take is going to be a winner. You know, trading out of elation. That's all emotions, and that's going to kill you trading. Okay, this is the quote about trading what you see and not what you think. Please don't trade what you think, because what you think is giving you a bias in the market that's not based on the stock prices, the price movement. It's based on something you heard, you saw, or you read. Okay, it's not based on price movement. And this is a quote from Stephen Hawking, and I really like this. Is really a good one. And the greatest enemy of knowledge is not ignorance. It's the illusion of knowledge. When you're trading, what you think the market should be doing or what it should do, that is an illusion of knowledge. You're trading with what you think is knowledge. It's not. It's an illusion, right? A lot of people this past spring, when the market went down hard on the tariffs and then bounced up on the tariffs, and there was a lot of talk about the market should be rolling over now. It should be bearish. The market should be going down with all these tariffs. The economy should be crumbling. So people were lined up bearish, and they were selling the market like crazy, buying puts on everything, and just trading bearishly. And meanwhile, the market was marching up. April, May, June, July, market higher, 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 higher. People still thinking the market should go down. They're lined up bearish. They were trading with the illusion of knowledge. They thought they knew something that they didn't know, and this is a killer. It's a killer because a lot of people, A, they lost money because they were shorting the market, and B, they missed opportunities to take good long trades. We had our best month this year in July when everybody was still bearish on the market. We had 30 wins and 3 losses in July. A big, huge month for us, the biggest one in 2 years as far as what the room did. $2,000 on each trade produced about 17,000 in profits. But that's because we were just following price. We weren't listening to what the gurus were saying, what we were reading on X or anything else. We were just trading what the market was doing. So that's a good one. Just keep that in mind. When you think you know something that you don't know, you're trading with the illusion of knowledge. Okay, we're going to talk about the SPY super system software itself right now. There's color codes on the system. You've got a green for bullish strong, blue for bullish trend, red for bearish strong, and yellow for bullish trend. That's a bearish trend. Those are the colors for the indicators on the software. Okay, so this is the software. This is a screenshot from a while back. It's changed a little bit since then. I'll show you the newest setups we've got. But this is what you're looking for here. Here is your indicators that are telling you what the institutions are doing. Right, this is current time frame momentum, we call it, right? And you can see it's different colors here, right? Green and blue is bullish, red and yellow is bearish. So you can see what's happening on the current time frame. This is on a 5-minute chart, so this is for 5 minutes. This is a multi-time frame momentum. This is what's much more important for swing trades. When you're looking at a swing, to get into a swing trade, your multi-time frame momentum and your current time frame momentum, these need to be aligned. Green or blue for bullish, red or yellow for bearish. If this was a daily chart, you couldn't take this trade. But for quick trades, intraday trades, then you can just trade off the 5-minute indicator here, right? The current time frame momentum. This is, I'll talk about this, is what we use for doing quick intraday trades off of stocks and off of SPY, Qs, IWM, etc. Multi-time frame momentum, long-term trend. You swing trades, you want this long-term trend. You'd like to have it aligned. It doesn't have to be, but it gives you more credence in the trade. It gives you more likelihood or probability if this is aligned up as well. Now, up here on the pricing part of the chart, this is a 5-minute chart. So we got a few things on here that we use. This is a pivot point, this solid white line. Just one pivot point is all we use. The pivot point, I don't trade off of it, but it's an excellent support and resistance level. If the stock price is coming down toward the pivot point and you're in a trade, you want to think about taking exits when it gets close to the pivot point, because they do hold quite often. This line right here is the VWAP, this pink line. This is probably the most important indicator that's on the 5-minute chart. Volume weighted average price, VWAP. This is what all the institutions use for entering and exiting trades. And what are we trying to do? We're trying to mimic the institutions, obviously. So if they're using that, we should be using that, right? So we use the VWAP very, very critically. The next thing we have here is the 15 EMA, this green line right here. That's the 15 exponential moving average of an exponential moving average. It's another support resistance level that we use. But I've added some more since then. I'm going to show you in a second. We also have, this is the market internals here. This particular indicator right up here doesn't apply to a stock. This applies to the whole market. So we can see exactly what the whole market's doing right now. I mean, all 6,000 stocks. It's got to be colored, green, blue, yellow, or red. It's going to say whether it's moving up or moving down. That's looking at all 6,000 stocks, and it's looking at the volume of the stocks moving up, subtract the volume of the stocks moving down, all of them, and that's going to come up with that particular market internals indicator. Okay, and we also have, if you get the SPY Super System, you get this template, and I'll show you the newest one of that. You also get this. This is just for folks who want to trade off the 5-minute chart for quick intraday trades. It's a template that just shows the current time frame momentum, because that's all you really care about on a 5-minute trade, because you're not going to stay in it all day. You're just going to stay in it for several candles, right? So that's what this other method is, what this other template is, and you get them both. You can swap them back and forth during the day if you want. This, by the way, is the actual Laguerre oscillator that we use. It's a modified Laguerre oscillator. It does not have divergence in it. It's strictly momentum. Right? It tells us exactly what's happening. Okay. So now I've updated the SPY Super System chart. This is what the newest one is that you get, and it's optimized for clarity and precision. I added the 8 exponential moving average for improved signal confirmation and trade timing for both entries and exits, and I'll tell you exactly why here in a second. But this is what it looks like. Again, we just went over all of these, but here's the 8 exponential moving average, a little white line right here. Now this is a support resistance level. The 8 is the 15 is a support resistance level. The VWAP is a support resistance level. All right, all 3 of these you can use for entering in a trade, above or below. And the 8 and 15 are really important because, again, institutions use these. I've been using these for years, and the 8 and 15 worked in conjunction. Usually, if you're in a stock and it breaks down below the 8, say you took it on the 8, the 15 will most of the time offer support. So it allows you to stay in a trade a little bit longer without getting out too soon, because it'll come down and hit the 15 and bounce off of it. And this is especially true on a daily chart. Daily charts, a lot of times, I'll be in a trade, the stock will break down below the 8, and I'll be questioned as to why I didn't get out of that trade. And it's because it held the 15. And holding the 15 is really important. It happens all the time. So you can use these in conjunction. But again, you can enter a trade as it breaks above the VWAP, or the 15, or the 8. These are your 3 levels for entering longs and shorts. Okay, really important. Now, what we've done just recently, and this is just going to be released this week, is we've added colors to the candles to identify when you have high volume candles. All right, so anything that's a high volume candle, if it's a bearish candle, it's going to be yellow. And if it's a bullish candle, it's going to be white. Why is this important? With the institutional involvement that you see right here, right? If you're looking what's going on down here and you see the volume going up and the institutions are in the trade, that gives you even a higher confidence that the institutions are in the trade because the colored candles will tell you that it's high volume, right? So it's really, really important. And it's something that I really think this was an important addition, because when you get a break above the VWAP or the 8 or the 15, and you've got the institutions coming in, and it's supported by a high volume candle, it increases your percentage winnings percentage by quite a bit as well. So this has been added. So any of the candles you see on the charts that you see today, you're not going to see it because I just added it. But this is one from yesterday. This was Apple yesterday. See how nice this was in the morning on Apple. Nice move up. It starts to, the candles go from white to yellow, and they top off. You know when to take profits right there. And then it came back down again, and you had some yellow candles here as it came back down. But you had too many resistance levels or support levels in the way to take this. You had the pivot point here, etc. But this was a nice long. This was UNH. This was when, if you look at yesterday, here's the chart. Here's the current time frame momentum. This is a 5-minute chart. So what are we looking at? We're looking at the current time frame momentum here is selling. Current time frame momentum went to buying right here on this blue, right? It goes from red to blue right at 10 o'clock. See what you're getting here on your chart up here. You've got the stock price breaking through the 8, through the 15, and through the VWAP. It's breaking them all with a white candle, a bullish candle. This means there's volume coming in as the institutions come in. It's being pushed by even higher than normal volume. All right, and these white candles continue to tell you that you've got some strength. Then they go to regular candles, but notice they never break down below the 8 and the 15. They touch the 15 and bounce again, and then you go right back to white candles, pushing this up all the way. So that's a beautiful trade right there, and this is where you notice how the candles get small. You get ready to take profits, and you take profits as it moves sideways, because you see it went to selling here. But that's a beautiful indication of how you can use these candles with the colored candles in conjunction with the current time frame momentum to give you even a higher probability win rate. It's really important. And the examples I'm going to show, I don't have that yet because I just put the colored candles on here just a few days ago. All right, but that's what they look like. And it's going to be dependent on that. Okay, so here's a trade we took on NVIDIA back on 10/24. And this was a 5-minute chart. What we were using right here is we see where we got the institutions selling, institutions buying, red to blue, right there. See how the stock's riding right along. It's just compressing right along the VWAP. And then you get this pink arrow. This is a pop out of the box symbol, a signal. This is what the SPY super system puts in place. It creates these. This is when the stock is now breaking above the VWAP or the 15. It's breaking out of compression. This is where you would take the trade. It went from red to blue as it broke above it. This is where you take the trade right here. And if I had the candlesticks colored here, I could see whether these were high volume candles or not. So now I would know if these are high volume candles, which they probably were, but who knows? But again, you see this was a nice trade. It ran up beautifully as it broke through there. It stayed blue. It went to green. Institutions are still buying the heck out of this thing. Perfect for intraday trade. Very, very nice. Hey, Doug, how do existing subscribers get the new volume candles installed? Rory's going to get that from me Monday, and they'll give it to everybody who has the software. And if you have a problem with it, they'll put it on there for you. But it's really pretty simple. It's pretty simple. You'll get that. Okay. All right. This was a trade on the SPY right here that we took short. Okay. You see how it went from buying green to selling right there. Went to yellow. See the breakdown right here as the stock price breaks below the VWAP. Remember, we want to be below the VWAP for a short. This is where you take the trade right there. Okay, and as long as it stays below the 8 exponential moving average, you stay in the trade. You could have stayed in the trade and stayed in the trade and stayed in the trade. You probably would have taken it off down in here as it starts to flatten out. But that's a beautiful trade. And notice the institutions were still selling this thing. Okay, this was again a SPY trade right here. This was a nice long. Breaks out right here, goes from yellow to blue, breaks out here, you ride it up. same thing. Okay, this was a Tesla trade. This was an early day trade. As it opened, I usually don't take too many early in the morning, but this was a pretty nice move. See, it went from red to blue right there, popped up above the VWAP. You could take it right there and then ride it up. Stays green. As soon as you start to get this this movement to the side, you take the trade off. Right? We just look right now. These are 5-minute trades. All right, these are not swing trades. All right, here's a swing trade. This is NVIDIA. This is a swing trade we took in NVIDIA. So what do we need with a swing trade? We need the current time frame momentum and the multi-time frame momentum to be aligned. Green or blue for long, red or yellow for short. Are they aligned? They certainly are. The institutions have been buying this thing since July 28th. But we didn't take it here. It was moving up. We were waiting. I was waiting for an entry back down around. This is the 15 on the daily, right there. All right, so this is what I was looking for. This is what's called a PBO, a pullback opportunity. A stock that moved up, came back down, hit a support level, and then bounced. We took it here on this bounce right there in NVIDIA as it was green, and it bounced off the 15. We take it there, we get out there, 32% profit in about 3 days here. That was, and again, it was still buying this thing. SMR was another one we took. This was back 515. They had earnings here. See, it went yellow on the earnings. There was some institutional selling on the earnings right here. But then right back to buying again on the next day, and we took it right there, and we were in and out of that thing from the 13 to the 15, 56% profit. Again, if you invested $2,000 in the trade, you would have made $1,170. I use $2,000 as a baseline for just my calculations for how the room and the alert service are performing. But you obviously don't have to do that, and I don't put the same amount each trade, but I have to have a baseline to use. Okay. This was a Wendy's short that we took. Again, daily chart. This is a swing type trade. Notice we're getting blue, red, blue, red. We get institutions in, out, in, out. Now they come in pretty strong here after earnings. This was earnings and or dividend, I guess. And we take it right here, and this is where we took the trade, and we took it 1 day and out right there. That was a really nice trade, but we're still getting a lot of chop here. But notice the multi-time frame momentum and the trend. We're all bearish, 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 bearish down here. Okay. All right, so that kind of just covers briefly the SPY super system indicators and how we use them. I think they're fairly easy to understand. I have a video on all the indicators and how to use them in your trading. I've got videos on every single strategy we use in the room. All right, so this just kind of shows you what an emotional trader looks like. And it can be a lot of things that cause this. The guy jumped into a stock with FOMO. It was moving way up. He finally cracked and decided to take a trade because he thought he was losing money. Thinks everybody's making money on this thing. He gets in, and as soon as he gets into the trade, 1 candle later, it turns around and starts ripping to the downside. Here comes the profit takers, and now he doesn't know what to do. Does he want to get out now and take a loss? Should he wait? Well, he's so far away from support. If he waits until he gets down to support, his P&L is going to be so red that he's probably going to be keeled over. So this is why when trading with emotion is so dangerous, because it has a huge impact on the way you trade. You're trading with fear, or you're trading with greed, it's going to kill your trading because you're just not going to be able to make good, rational, logical decisions. And here's somebody who knows what they've got a methodology they like. They got the SPY super system. They know what trade they're in, and they know when they should get out of the trade. Right? They may take losses, but they know why they're taking losses. Okay. One thing here before I move on, I'm going to talk about the process precedes results, and this is what I talked about before. You have to learn the methodology and internalize the methodology for high probability trade setups. Institutional trading, relative strength, relative weakness, support resistance. You learn those things. You have to have that process learned. It's not that complicated, but you need to instill it in yourself, and then only take trades that based on that process. Again, if you're focusing on your results, the P&L, without having a solid process to follow, it's going to end in failure. And I mean, I've known a lot of traders who take a trade that it's terrible. They'll show me a trade. I'll tell them, this is a bad trade. Shouldn't be taking the trade. And then they'll come back and say, I made money on that trade. And I say, there's bad trades that'll make money for you. The problem is when you take a bad trade that you shouldn't have taken and it makes money, in your mind, you've just reinforced the fact that that trade's going to work. And believe me, when it comes up again, you're going to do it again because you took a bad trade that made you money. And you can take a good trades that'll lose. That's just the way trading is. but you should always analyze your trades to determine especially your losses. If the trade was a bad trade that you shouldn't have taken, or if it was a good trade that didn't work. It's a big difference. Okay, so that's the process. So here's the process right here. All right, this is what I always say. And if I'm assuming again it's going to be a swing trade, then you have to look at your daily chart. Very important to look at your daily chart. All right, and then you align with your 5-minute chart. So if you're taking a swing trade in the daily chart's bullish, you kind of on the 5-minute chart, you're waiting for a level to get into the trade where you feel like it's the best level you can get. Stock breaks above the VWAP or something like that. Right, but daily chart first. Trade with the trend, if there is one, both the stock and the market. I mean, the stock trend could be different than the market trend. You could have a bullish stock when the market's moving up. And I don't say you don't take those, but you just know that if the stock's moving up and the market's moving up, it's going to give you a bigger edge because you're trading with the trend on both the stock and the market. But trading with the trend is important. You obviously don't want to trade against the stock trend. SPY super system must align. This is the deal breaker here. If you're taking a trade and the SPY super system doesn't tell you that it's bullish if you're going long or bearish if you're going short, which would be a 5-minute chart, on a 5-minute chart, it would be the current time frame momentum. On a daily chart, it would be the current time frame momentum and the multi-time frame momentum. Both of those things would need to be aligned, bullish or bearish. If it isn't, that trade, you're going to kick that stock out. Then you look for stocks with relative strength and relative weakness to the market, because you may have 5 or 6 trades that align here. And then what you want to do is find the one that has the best relative strength or for the long, or the best relative weakness for the short to the downside, okay? And then enter near support or sell near resistance. And you may have to put an alert on your chart for that. Depends if the stock is close to support or resistance right now. A lot of times we'll take trades, we'll know when they go through the VWAP, we'll see it, and we'll take them right there. But what this means is don't chase, okay? Wait for support or resistance. All right, so that is the high probability trade setup funnel right there. And these are the kind of trades that we take. These are the strategies in the alert room, and the alert service that we take. All right, we do straight calls and puts. We've got O'Reilly right now. We've got straight puts on it. We also do straddles and strangles. Straddles and strangles are non-directional trades. If you're not sure what they are, don't trade them, but we have a video on how to trade these. Basically, if you've got a stock that you think is going to move a lot, but you don't know which direction, you might see a stock that gets killed on news. It goes crashing down 20% on news. You don't know whether it's going to keep going down or going up, but you think it's going to react fairly violently one way or the other. You do a straddle or a strangle, because that way you don't care which way it goes. As long as it moves a lot, you're going to make good money on it. And the criteria, that's very specific. You've got to be able to get into the trade for a specific amount of money based on the ATR. And I have a video on that. We do debit spread using weekly options expiration. Usually, I did a debit spread on BBAI that goes out to January 16th. That's not something I usually do. BBIA, I'm sorry. And it's not something I usually do, but it was very expensive. The spreads were wide. I thought that was the best opportunity, and I think it only had monthly expiration. So, but most of the time my debit spreads will have weekly options expiration. I do time spreads over earnings, called calendar spreads, to capture volatility crash. This is another non-directional trade. I don't care which way the stock goes. And I've got very stringent criteria for finding these. And we have a very good track record with these things. But we only do them obviously when earnings season coming up, which right now we're not in earnings season, but it's going to start the week after next. January 13th, I think, is when the earnings begin. For the next 3 weeks, we're going to have a lot of earnings. We'll be doing a bunch of time spreads. And these are all overnight trades. These don't impact you if you are under a PDT rules. Can I share the TOS scripts? The TOS scripts you would get if you bought the software.